I met this young engineer here in Manhattan on the street yesterday, and he started talking to me about his finances. And what he said to me essentially was, Jaspreet, I make decent money as an engineer. The problem is after I pay for my rent, which is expensive here in Manhattan, after I pay for my groceries, which is expensive here in Manhattan, and after I pay to go out, which is expensive here in Manhattan, I don't really have any money left over to invest. And I don't know how to start investing because every time I put my money into a company, that company's gone down and I've lost money. So what do I do to actually build wealth? And what we talked about was, number one, you gotta put aside some money every month. And it doesn't have to be $1,000 or $10,000 or $10,000 to start. Start with $100. Now break that up into a weekly amount. So if you're gonna invest $100 a month, because most people, nearly everybody, can find an additional $100 a month if you try. Many of you can do more, but let's just stick with the $100 a month example. Now you break that up into 4 pieces, $25 a week. The reason why I say break it up into weekly pieces is because if you don't do it weekly, you're gonna forget. And then by the end of the month, you're not gonna have the $100. So take this monthly amount, whether it's $100, $50, $500, $1,000, pick an amount that you're comfortable putting aside every month, break it up into 4. So $25 a week. And now allocate that much money every week to be invested. The reason why you want to do this is because time in the market beats time ing the market. This is what Warren Buffett says, the famous investor. The whole idea here is as the markets grow, as the stock market grows, you want to be able to see your money grow as well. Because when you're an engineer, when you're an accountant, when you're a doctor, when you are a teacher, when you're a firefighter, when you work somewhere, you have to go to work to get paid. But if you don't go to work, you don't get paid. And if you look at the wealthiest people in America, they don't make their money through their salary. They don't make their money through the work that they do. They don't make their money through their labor. They make their money through their money. Their money is what's making them richer. And you're gonna say, well, Jaspreet, I don't have a trust fund. I don't have millions of dollars. How am I supposed to let my money make me richer? Well, you don't need a trust fund. You don't need $1 million to start doing this, but you have to start with $25. You have to start with $10. You have to start with $1 because you got to start letting your money grow so your money can start growing even when you're working. Because now you're going to have 2 streams of income as soon as you start doing this. It's not going to seem like it at first, but this is what you're building. One stream is you going to work to get paid. The second stream is your money working to make you money. And in the beginning, I call it the decade of sacrifice. In the beginning, it is the most difficult part because in the beginning, you got no returns. A 10% return on $100 is $10. And it's going to take you a whole year of growing your money by 10% to earn $10, which is really no money at all. But when you have more dollars working for you, that 10% return can mean a lot more. Like a 10% return on $10,000 is $1,000. Still not that significant in the grand scheme of things, but it's a lot more than $10. A 10% return on $100,000 is $10,000, and a 10% return on $1 million is $100,000. Now we're talking serious money. But in order to get that $1 million, you gotta go through the steps, which is you're going to work, and now you gotta invest a little bit of money every single week. Every single week, put money aside to be invested. You don't have to wait till the end of the month or the beginning of the month because many times you're gonna forget. That's why I like to invest money passively every week. But you're just gonna put a little bit of money into the markets. That way you can start letting your money grow. And I'm gonna talk about how you invest your money and where you invest it in just a minute. But the whole idea here is now you have created 2 streams of income. One that's working passively, which is your investments. One is actively, which is what you're doing at your job. Now you want to work to grow your active income, work to get a raise, work to get career changes, work to get a new job if you need to, work to improve your skills. Like you're going to work to increase your active income. But the reason why you want to do this isn't so you can just drive a faster car and do more bottle service at clubs and buy a whole bunch of other dumb stuff. It's so you can have more passive investments, more stock market investments, more real estate investments. Wealthy people get wealthier because their investments go up in value or because their investments start paying them more cash flow. They don't get wealthier because they get a big raise. That's what the majority of people think. The majority of people think that your wealth is built through the salary you get from your job, but that's not true. If you look at any wealthy person in this economic system, you're getting wealthier because the value of your investments are rising or the cash flow that you're getting from your investments are increasing. Now for me, the game that I play is cash flow. I like to invest for cash flow, where I use my money to buy investments that pay me with cash flow. That way now I have an income that I can actually spend. If my stock market portfolio goes from $100 to $200, that's not actually money in my pocket. So it looks like I'm richer on paper, but I'm not actually richer, because in order for me to have the $200, I have to sell my stocks, and now I no longer own that asset. So it's a different game, and you got to figure out what's right for you. What some people do, and I'm not an advocate of this, is they see their stock market portfolio go from $100 to $200, and then they'll use debt. They'll do a refinance out, where they'll pull some cash out of this portfolio through debt, but then you have to pay it back plus interest. But I don't like playing that game, because then if your stock market portfolio falls, you're underwater, and that's just too risky for me. So this is where you got to start with $25 a week, which is a few dollars a day. If you can start with this, you can build wealth. But you have to start by finding a little bit of money every week, and then you got to put this money aside, which then brings us to the second question, which is, where do you invest your money? Now, this is where you want to pay attention to what's happening in the economy, because of course our money has changed, interest rates have changed, inflation has changed, our economy is slowing down. This is where you want to pay attention to what's happening, and this is where on August 14th and 15th, this is why I'm hosting my live investor summit. Now, I know this is kind of a very native integration, so let me explain this. On August 14th and 15th, I'm hosting a live workshop where I'm going to be going over, number one, how our money has changed, but also number two, how investment and wealth building opportunities have changed over the years, and how you can build wealth in this new economy, in a time where inflation is still high, in a time where interest rates are still high, in a time where the economy is slowing. How can you find new financial trends and build wealth? I'm going to be going over on this workshop. It's free, it's virtual. All you have to do is register. We have a limited number of seats, so if you'd like to join, I got the link for you down in the description below. But in addition to that, what you want to do now is understand what it is that you want to invest in. And most people, I say 98% of people, should not be trying to go out and find individual companies to invest in, because A, you don't know what you're investing in, B, you don't know how to research the company, and C, you don't have the psychology to invest in individual companies. Because if we look at the Wall Street Journal, what they were saying about companies like Sears and Bed Bath & Beyond 15 or 20 years ago, they were saying that these companies were category killers, that Bed Bath & Beyond was innovating, that they were leading the markets, that every company was trying to be like them, that Sears was growing, Sears was acquiring their customers. But if you look at those companies today, they're bankrupt. So if you were investing your money, your life savings, your retirement funds, your wealth funds into these companies thinking that this was going to make you rich, well, you would have lost everything. See, that's called risk. And that might not be for you. For some people it might be, but for some people it's not. The alternative to investing in individual companies is to invest in a fund. A fund is a basket of companies. Now, instead of investing in one company like Nvidia or Amazon or Tesla, now you can invest in a fund that gives you exposure to the 500 biggest companies on the stock market. That's called the S&P 500. The S&P 500 is a group of the 500 largest companies in the stock market. And instead of you investing in each one of them, you can just invest in a fund that gives you exposure to the S&P 500. For example, SPY, that's the ticker symbol for an ETF. That's the type of fund. ETF is one type of fund. You have mutual funds and index funds. ETFs are one kind of them. But SPY is an S&P 500 ETF that gives the exposure to the 500 largest companies in the stock market. So if you buy one share of that fund, you own a small piece of the 500 largest companies in the stock market. Now, I gotta give you the disclaimer, because I'm just a random guy on YouTube. I'm not a financial advisor. I can't tell you what to do. I'm not here telling you what to do, and I don't recommend what I do to anybody else. My goal is for you to be better with money and be more financially educated. But if you were to invest in something like SPY, now you're investing in a basket of companies, and if one of those companies in SPY in the S&P 500 goes bankrupt, that company would then be kicked out and replaced with another company. Plus, that losing company would also be balanced out by some of the winners. Some of the winners are going to be balanced out by some of the losers. So you have less risk, less upside, but also less work. And so you got to decide now, do you want to be a set it and forget it passive type of investor, or do you want to be more involved? Neither of them are wrong, but you have to know your strategy. For me, I do both. I have a system where every Wednesday money leaves my checking account and is automatically invested into my portfolio of funds. I also have a strategy where money is put into a separate bank account that's waiting to be invested when I see a good investment opportunity. Now, I look for investment opportunities in the stock market. I look for investment opportunities in the real estate market. I look for investment opportunities in the startup market. I look for investment opportunities in the crypto market. I look for investment opportunities really wherever, but that's not for everybody. And you got to decide what's right for you, because the problem is you have a lot of people that get excited by the concept of investing, which is good. Investing is how you build wealth. But then you have a whole bunch of random people on the internet that will tell you that if you want to get rich, buy a random cryptocurrency. Buy this random stock. This is a stock pick that's going to make you rich. And it's exciting. I mean, there's a lot of money in that industry of selling stock picks, of selling crypto picks, of selling penny stocks. I mean, there's a lot of money in the industry. Trust me, I know. I'm in the media company. I'm in the financial media space. I see it. I can make a lot of money trying to pick stocks and selling stock picks. But I don't do that because I don't agree with that. Because even for me, a good stock for me may or may not be a good stock for you, because it depends on your risk tolerance. It depends on how you want to get paid. I like cash flow with the majority of my investments. And it depends on what you want to do in your portfolio, how fast you want to see those returns, and how much growth you're looking for in a company. Growth comes with risk. And so you got to understand now, what are the different ways that you can get paid? See, when I invest my money in real estate, my goal is to generate cash flow. I buy a property that way it can pay me cash flow every month. When I'm looking for funds in the stock market, the majority of the funds that I invest in the stock market are dividend paying funds, meaning they pay a cash payment every 3 months, every quarter, for me just owning a piece of these funds. So now every Wednesday, I'm buying more of these cash flow producing funds. That happens whether the market's up or whether the market's down. It does not matter. This is called dollar cost averaging, by the way. Every Wednesday, I'm buying more of these funds. Now, hopefully the funds go up in value, but that's not the game that I'm playing. The game that I'm playing is now every time I buy more of these funds, I'm going to get a bigger cash flow check every quarter, every 3 months. Then when I get this cash flow check, that cash flow check automatically gets reinvested to buy more cash flow. See, it's like a wheel. I'm working to generate income. That's buying the cash flow. The cash flow is buying more cash flow. That way now I can work to stack the cash flow and then be able to live off of this income. It's the same with my real estate. My real estate cash flow is what funds a big chunk of my life. I work to accumulate the rental properties. The rental properties pay cash flow, and then that's the cash flow that I can spend. I'm not working to spend my active income. I want to use my active income, the money I'm working to earn, to buy more investments. My investments then make money passively, and then the passive income can then be spent. But it doesn't start with $1 million, $100,000. You got to get started with a little bit. I call it a decade of sacrifice for a reason, because you're going to have to go through this decade of working to live smaller and earn more so you can invest your money like crazy. And it starts with you finding a little bit of money, whether it's $10 a week or $25 a week or $100 a week. Start with whatever you can. Find an amount that you are comfortable investing and just start with that. And you don't even have to find the perfect fund or the perfect investment, because you're gonna change it. But you gotta get your toes wet. You gotta start learning the ropes. You gotta start building your financial education. Then you gotta start learning the financial trends to see what it is that you want to invest in. Then you want to start building that financial preparedness, which is having more cash to protect you, right? It's all a process. You don't want to go from 0 to 100. You're gonna start with 0 to 1, 0 to 2, 2 to 4, 4 to 8, 8 to 16. I mean, you're gonna start. You gotta start slow. You gotta crawl before you can walk. You gotta walk before you can run. And everybody wants to get to the destination, but in order for you to get to the destination, you gotta start moving. And this is where you just gotta get started. Start with a little bit of money and just start investing it. Stop trying to time the market. Stop trying to find the perfect investment opportunity. Stop trying to find the perfect thing. Yes, we will see pain in the future. Yes, we will see a market crash at some point. Yes, we will see a recession at some point. But that doesn't mean you shouldn't wait to get started. Start with a little bit. Start living below your means right now. Start finding some extra money to invest. Start finding things to start investing in and start putting it to work. Once you start putting it to work, that's when you start optimizing. That's when you start realizing, how can you get better returns? How can you grow your money faster? It's the same thing that I tell people. I mean, I'm not a financial or fitness advisor either. But when people talk about how do I get in shape, you'll see fat people talking about the nitty-gritties of which diet you should use. When in reality, the first thing you gotta do is stop shoving your face with donuts and ho-hos and get on a treadmill. Once you do that, once you stop the donuts and ho-hos and the Twinkies and you get on a treadmill, now you start optimizing. What types of diets are better for you? What types of exercises are better for you? But you gotta get started first. It's the same thing with your investments. You gotta get started first. Once you stop shoving your face with the donuts, Twinkies, and ho-hos, now you can start optimizing. But you just gotta get started first.